Lilladher now joins in. Dilip, hi, good morning. Good to have you on the show.
Always a pleasure.
First a word on HCL Tech. After the numbers, we've seen a bit of a disappointment in the stock. What's your call here and the entire IT sector?
Well, I think the HCL Tech stock was not really expected to do well post results also. I think overall they had given a warning guidance earlier on. So I think it was always better to wait for the results. But having said that, I think from here on, HCL Tech should be viewed a little on a longer term basis. I think their margins and especially their realizations all probably are going to come back maybe in 2 or 3 quarters is what we understand. But overall, I think this is a stock, you can have it for the long term. Don't expect that in the next 2 to 3 quarters anything great is going to happen. Because this company has consistently guided for a lower, they have guided lower in the last 1.5 years if I am correct. So I think overall that stock looks good on a longer term basis. And as far as the IT pack is concerned, it still is going to be Infosys in the front line. I think TCS will still look good even in the front line. And particularly Infosys looks very good and solid if you want to invest for 1.5 years. Because IT space really is one of the few sector where the valuations are reasonable, though the growths are not really great. But you still have 30% plus ROEs, you still have companies generating free cash, and on all the parameters, I think they look pretty good and interesting. So I think IT is certainly you have to have it in your portfolio to get an absolute return over next 1.5 years. And of course, in the mid cap, you have something like Persistence, you have something like an NIIT. I think some of these stocks will continue to look, even Mindtree, I would say, looks pretty interesting. So some of these would qualify as far as the mid caps are concerned.
Okay, well, Infosys is in focus also because they've made a $70 million acquisition today. A lot of stocks in focus, also Aegis Logistics, where they've got a 3-acre land at the Bangalore port to build a storage terminal. So that stock is spiked up quite nicely. And Kilich Drugs as well, where they have formed a joint venture in Ethiopia. And that stock is also doing quite well. So that stock should come up for you. Now up around 12.5% post the news of that joint venture where they'll be holding 97%. Dilip, hi, good to see you in today. In terms of the IT stocks that you now have in your portfolio, which ones are they then?
Which ones?
Which IT stocks have you maybe increased your weightage on or maybe reduced?
So well, as far as the increase is concerned, as what I said, Infosys certainly is one of the stocks which we feel from medium to long term also that is a stock where we have really increased the weightage because our outlook really is very positive on Infosys. I think as far as the other stocks in the front line are concerned, in the order of pecking, it would still be something like CS, which will also, that's another stock where we have not increased the weightage, but still overall we feel that that's a stock to have it. And in the mid cap space, the couple of stocks which I just mentioned right now, Mindtree, Persistence, and maybe the NIIT Tech.
Okay, Dilip, the stock of this month has been Tata Motors. After a brutal correction, we have seen smart 30-35% rally. Do you think that's sustainable from here on as well?
Anuj, you know, Tata Motors, probably the way it fell really surprised everyone beyond the expectations. Because, you know, at 300, it was much below the 52-week low. And, you know, and it defied all the logic. Maybe as what we understood, some big FI was really selling the stock in a big way. So maybe that really put the pressure continuously. So I think having said that, Tata Motors certainly looks pretty good and interesting even from the current level. Of course, it has moved up from the 300 levels to whatever it is at the moment. And I don't think that it has come up that much as per our expectations. But our expectation is for next 1.5 years. I think JLR story is slightly, there is some confusion about JLR story, and I think which is what is really driving the profits for the company. I think the Chinese operation is something where people are very closely scrutinizing how that is going to pan out. So, and in the domestic market, you have the medium and heavy commercial vehicles, which is showing some fair bit of recovery, though LCV is really lagging behind. So, on a net sum basis, Tata Motors still looks pretty cheap, very reasonable in valuations, and I think on a slightly longer term basis can give a very handsome return over 12 to 15 months.
Okay. Well, there was some news in the logistics space, which was Aegis Logistics. But Dilip, I see that you like Allcargo. What's your rationale there, and maybe target price as well?
Well, Allcargo, really speaking, as what we have seen, the company is very reasonably valued. I think it's a big player globally also, and they have been consistently showing a fair, a decent ROC of around 15 to 16%. Though they have a penchant for making some big acquisitions, but this is a stock which I think certainly has a lot of potential to really blossom in the current bull market. And what we think is the way the company is generating free cash, they will also bring down the debt of the company unless and until they make any other big acquisition. And even if they make, I think their track record has been pretty good. So overall, I think even from the current level, we feel that it can give at least 25 to 30% depreciation from the current level. That's what we feel about Allcargo.
Okay, Dilip, I'm reading your house's last strategy note, and there's some pharma stocks which I mentioned there, and one that really stands out for me is Jubilant Life Sciences. Why do you like this stock, and what are your price targets here?
Jubilant Life Science, I think we spotted pretty early, and it has had a fairly good run since we spotted this particular stock. I think we spotted around 185 to 190 at those levels. And I feel that this is a stock which has made very heavy investments. If you were to see the balance sheet and the turnover, the working capital, the capital intensity of the business, and taking all that into account, I think the stock probably has the company has invested enough in the business. What we really feel is over the next 2 to 3 years, you will see company extracting more out of the assets and the capital that they have invested, and which is where we see the bottom line growth of almost about 30-35% over next 2 years happening for the company. And more important, I think the return ratios will look pretty good and interesting. Though I think on one point there will always remain a doubt about the capital allocation which the company does to its business. But overall, I think they are moving in the right direction. The trajectory is pretty good, and we feel that this stock, even from the current levels, there could be some correction in between. But even from the current levels, can still give about 40 to 50% depreciation over 12 to 15 months.
Okay. Dilip, I just had one quick question from the NBFC space or the MFI space, the microfinance space. SKS Micro comes out with its numbers today. That stock didn't, or the company did not get a small bank license. And now there's growing concern that because of increased competition in the banking space, in fact, the ones that did not get a license might in fact be better off because they have a niche to concentrate on. Would you look at SKS and from that perspective, and how would you approach the stock?
Well, we don't have a very detailed coverage on this SKS stock at the moment. But from whatever that we have been hearing and we have been reading about the company and its analysis, I think that stock probably is in a very, the company is in a very niche area at the moment. Yes, of course, some of the things which you mentioned about the banking license, all those things may have some kind of psychological impact. But still, I think the area in which they are operating, they have a good amount of money to be made. Of course, they are always vulnerable to making a good amount of NPAs out over there because the risk returns are pretty high out over there. But from the current level and looking at the long-term prospect of the company and the sector in which they are operating, I think this stock will gradually get re-rated as they continuously and consistently show performance over the next 1.5 years.
Dilip, a word on the overall market scenario as well. Where do you think we are right now? We've seen a fairly sharp rally from the recent lows of 75.50, 7600 thereabouts to 8200 now. Do you think this rally is sustainable, or do you think it will stall at some point between now and maybe next 300, 400 points?
So Anuj, as what you very rightly said, that from 75 levels it has really moved up very sharply. what is more important to note in that is the volatility still continues to be it continues to be pretty conspicuous, and probably that will still continue at least till the end of the year, or maybe in the beginning of the year, say in the month of January. And I think the FII figures are something which has shown that they have been selling. Maybe India is a part of the overall emerging market exit which the FIIs have been doing, and some of the big FIIs, the long only funds, have sold in a big way. So that is what is really causing the worry as well as the volatility. Having said that, I think market still looks good for another about 150 points on Nifty, even from the current levels over next 1 month possibly. But I don't think that in the next up to December, January, you should expect anything great. Maybe this is the level around 8,000, 8,200, maybe on the lower side 7,800, maybe the level at which it will continue to move with a lot of volatility. And as we head into a proper result season, I think the initial results, whatever they have come, I don't think there have been anything great or something great can be expected. Everybody will be watching for the volume growth in the company, and I don't think that is what is going to happen in any great way. So I think in this quarter, I think the investors will also be watching whether there is any economic recovery, whether there are any green shoots, because otherwise the asking rate for the overall index EPS will be too much as we move into the third quarter and the fourth quarter. So some downgrades in the EPS earnings is also very much possible. Taking all that into account, I think markets are going to remain range bound. But in the longer term, if you are 12 to 15 months, I think yes, Nifty looks set to touch at least around 10,000.
Okay, so let's talk about a couple of more stocks then, Dilip. I believe you like Sadbhav Engineering. What's the story here? And JSW Steel is another of your picks.
Well, as far as Sadbhav Engineering is concerned, I think that's one of the stock which has really stood out in the entire turmoil in the engineering sector. And I think we have seen how well they have managed the business, and that itself speaks a lot about the ability of the management. They have been able to navigate all the problems which other engineering companies have really not been able to, and they have remained pretty focused. And I think looking at the balance sheet, one of the few companies which can really still continue to get some good solid orders even in the next 1 or 2 years. So we feel that on an overall basis, it is still very reasonably valued and still has a good steam left in terms of its growth.
Okay, fair enough, Dilip. We're going to leave it on that note. Any disclosures?
Well, it would be fair to assume that directly or indirectly we would be interested in some of these stocks which we spoke about.
Okay. All right, Dilip. Thanks very much. Time for a break now, but as we do that, let's get in some